What if a company reported lower revenue and its stock story actually got stronger? That's exactly what happened with TAT Technologies this quarter, and if you're following this stock, you do not want to miss what's buried inside this earnings call. Here are the top 10 takeaways from TAT Technologies Q1 2026 earnings call, counting down from number 10 to the most important thing management said all morning. Coming in at number 10, TAT's heat exchanger business quietly delivered one of its best operational quarters on record. Despite facing a tough year-over-year comparison, Q1 2025 was inflated by a big push to close late orders. The business is seeing increasing orders from both OEM and MRO customers heading into 2026. And here's the kicker. TAT achieved better than 97% on-time delivery to customers this quarter. In a business built on reliability, that kind of execution matters. At number 9, the trading and leasing segment posted 29% year-over-year revenue growth. This is a business that management openly acknowledges can be lumpy quarter to quarter, but that underlying demand picture remains very strong. Even with some engine exchanges blocked by the same parts availability issues hitting the MRO side, this segment still grew nearly 30%. That's a meaningful contribution to the consolidated results. Number 8 is about M&A, and TAT is getting serious. Over the past 9 months, leadership built out a dedicated corporate development team with direct aerospace industry relationships. They've expanded the board with operators from scale companies, developed internal M&A processes, and are now actively engaged with acquisition targets and private equity firms. Management committed to completing at least one deal in 2026 while remaining disciplined on price, and they noted that market multiples have actually come down recently, which could work in TAT's favor. At number 7, the supply chain recovery is already underway. This is critical. Management isn't just hoping things get better, they're seeing it happen. Parts flow on the APU side has improved meaningfully in recent weeks. OEM partners are reporting progress on their end, and TAT is also sourcing alternative parts to accelerate the ramp-up. A full normalization is expected within a few months, not quarters. Number 6 is about APU intake hitting a record high in Q1. Even as deliveries were delayed by missing commodity-level parts, customer demand for TAT's APU maintenance services has never been stronger. The company won new business, added new customers, and entered Q2 with more contracted work than it started Q1 with. The book-to-bill ratio was above 1, meaning they're booking more than they're shipping. That's a powerful signal. At number 5, TAT's balance sheet is a strategic weapon. The company ended Q1 with $51.2 million in cash and only $11.2 million in total debt, a debt-to-EBITDA ratio of just 0.45. Shareholders' equity stood at $180.5 million. That financial strength gives TAT the flexibility to pursue M&A without needing to raise additional capital while continuing to invest in organic growth. Number 4 is gross margin expansion, and this one surprised analysts. Even though revenue declined slightly year-over-year, gross margin actually expanded by about 80 basis points to 24.4%. Management has been executing on operational efficiency initiatives every single quarter, and the results are showing up in the numbers. As revenue recovers in the back half of 2026, that margin improvement should accelerate further. At number 3, the revenue decline was a supply chain timing issue. Full stop. About $15.5 million worth of APU and landing gear work orders were sitting near complete at quarter end, unable to be shipped because of missing commodity-level parts needed for final assembly. That's not lost revenue. It's deferred revenue sitting in TAT's backlog, fully contracted, ready to ship the moment those parts arrive. Operating cash flow was still positive at $1.9 million, a $6.9 million swing from negative $5 million in Q1 2025. Number 2. TAT's full-year 2026 growth outlook remains fully intact. Despite the Q1 noise, management reiterated their expectation of meaningful growth in both revenue and EBITDA for the full year. The demand is there. The contracts are there. The workforce and capacity are there. All that's missing are some commodity parts, and those are coming. And the number 1 takeaway from this entire earnings call, TAT's backlog just hit an all-time record of approximately $580 million. That's up from $550 million at the end of 2025, driven primarily by new contract wins, not just backlog carryover. When a company's backlog is growing at record pace, while a temporary supply disruption is suppressing near-term revenue, that's not a broken business. That's a coiled spring. And based on everything management said on this call, 2026 could be the year it unwinds in a big way. If you found this video helpful, don't forget to like and subscribe for more earnings analysis from Earnings Central.